Hello and welcome to Unacademy IAS, a one stop destination for all the English medium civil services aspirants. Welcome to another session of economy this week, wherein we are going to take up the economy related articles from different newspapers which have appeared from 27th November to the 3rd December and analyze them. If you're liking this initiative, do not forget to hit the like button. If you're yet to join our YouTube channel, kindly do it right now. Before I start with the first article, I have a very important announcement, and this is for those aspirants writing the civil services examination in 2026 and 2027. All our courses right now are available at a 20% discounted price. Check out the details in the website. Whatever is the price mentioned, use the code IS English and you shall receive 20% discount. Those interested to enroll, click on the link provided in the description below. Let me start the discussion now. The first important article is Center tabling the bill for new national security and healthcare cess. Yesterday, the Lok Sabha has approved the amendment to the Excise Act. Now, what are the important points? Let's understand. The government of India, back in the year 2017, that is from 1st July 2017, introduced the concept of goods and services tax. With the introduction of the GST, the government also introduced a concept of GST compensation cess. And what was the idea of a GST compensation cess? The states which gave away a lot of indirect taxation power to the central government were worried, were concerned that they would not be able to collect sufficient amount of taxes under the GST. So the government of India, for a duration of 5 years under the GST, announced concept of compensation cess to the states. Under the compensation cess, the base rate, that is basically the slab rate of GST, was 28%. In addition to 28%, multiple commodities or the goods which were under the 28% were identified and different rate of GST compensation cess was imposed. And this was applicable even to the tobacco products. So Government of India, in addition to GST rate of 28%, would impose the GST compensation cess, and it varied from one product to another product associated with tobacco. In addition to this, there was also the central or union excise duty applied on the tobacco products. Now, this is basically the idea. The government very recently has announced rationalization exercise under GST. And with the rationalization exercise, the government of India has decided to do away with the 28% slab. And all the sin goods or the demerit goods, which would attract 28% until now, would be taxed at 40% going forward. In addition to this, the government of India has also announced that once the loans that the government took during pandemic to pay compensation to the states, once those loans were repaid, even the GST compensation cess would be removed, would be withdrawn. Now, with these kind of changes, if no other rates are changed, that is, if no other tax rates are changed by the government, then the effective tax rate on the tobacco and its products would become much lower. So the government of India now has announced one changes to the Central Excise Act. Under the changes which have been proposed in the bill, which, like I said earlier, has been approved by the Lok Sabha, the excise duty applicable on the tobacco products would be increased. Once the excise duty increases, automatically the tax, that is the effective tax applicable on the tobacco products, would become similar to what was applicable before the withdrawal of the GST compensation cess as well as changes in the GST rates. This is the first very important announcement. And the second very important announcement is the government also has proposed implementation of the National Security and Healthcare cess. National Security and Healthcare cess. Now, what are the implications of all of this? Let's understand. In the context of excise duty, please remember the government of India under the Schedule 7 of Indian Constitution is allowed to impose multiple types of taxes. Most of the goods are imposed with excise duty by the central government. The central government imposes the excise duty on most of the products. But it doesn't mean that the states are not allowed to impose any kind of a excise. Under the Constitution of India, the states are allowed to impose excise on alcoholic products. Please remember this particular distinction. So, excise duty, most of it is imposed, collected by the union government. Point number two, in this particular case, whatever is the duty that is collected by the union government forms the part of the divisible pool of taxes. Divisible pool of taxes. And what does it actually mean? Whatever is the total amount of taxes which is collected under the divisible pool, it will be used based on the recommendation of the Finance Commission, will be used to divide between the center as well as the state government. According to the Finance Commission recommendation, which is applicable right now, that is 15th Finance Commission recommendation, 41% of the total divisible pool of taxes would go to states. So with the government imposing higher amount of excise duty, we expect the total amount of taxes through excise would be higher, the contribution to the divisible pool would be higher, and the flow of funds to the states would also be higher. This is the first very important point. And those who are wondering, sir, why does the government need to impose a higher rate of taxes on tobacco products? Worldwide, the practice has been that over a period of time, that is from 1 year to the next year, certain indicator is used to adjust the tax rate on the tobacco products. There are more than 80 countries around the world which use one or the other indicator. For example, inflation is used in some of the countries wherein the tax rate is adjusted from 1 year to the next year according to the changes in the inflation rate, so that the tax burden on the consumers who consume these kind of demerit goods or sin goods will always be higher. In fact, the World Health Organization recommends that the tax burden on the tobacco products should be 75%. In case of India, according to the statement issued by the finance minister, the tax burden on the consumers of tobacco products is in the range of 53%. And since the introduction of the GST from the year 2017, the tax rate on these particular products has remained unchanged. These are very important points. Please remember all of them. And you do not have to write down everything that I'm writing here. After the session is uploaded on the YouTube, go to the description part of the video. There will be one link, Indian Economy Repository link. Click on the repository link. You will be taken to one more sheet where all the PPTs that I've used, the notes associated with the articles that I'm discussing will be uploaded there. Click on the links there, download, but more importantly, use the notes for revision purposes. Now come to the second aspect of the article here, National Security and Healthcare cess. National Security say Healthcare cess. What is the basic idea for cess? It is an additional levy that is imposed by the government to achieve a specific objective. To achieve a specific objective. Earlier we had Krishi Kalyana cess. Earlier we had Swachh Bharat cess. Even today we have Agriculture Infrastructure Development cess. Now in addition to this, there is one more cess that has been proposed on pan masala producers. Pan masala producers. And this particular cess which has been proposed will be applicable on the volume of the capacity or the installed capacity of the company, not on the total production that is done. Instead, it will be imposed on what is the installed capacity that you have. Meaning what? Imagine here is a producer of pan masala products. If they are covered under this, 100 units is the installed capacity. So on the 100 units, the cess will be imposed and collected. Whether the manufacturer produces only 60 units, 70 units or 50 units, doesn't matter. So on the volume of installed capacity or the production capacity, the cess will be imposed. And another very important point associated with the cess is the fact that cesses and surcharges are not part of divisible pool of taxes. Please remember that. Cesses and surcharges are not part of divisible pool of taxes. So these are certain very important points associated with the first article. Now let's solve an MCQ. Those who want to solve the question on your own, pause the video, solve the question. If you do not want, then let the video continue to play. Let me solve the question. Consider the following statements. The tobacco products right now are attracting 40% GST rate. Underline the term right now. Right now, these are not attracting 40%, these are attracting 28%. Again, the government of India stated for some time it will be 28. Once the government of India does away with the idea of a compensation cess, these would be shifted to 40%. The tobacco products attract GST, cesses, as well as excise duty. Yes, the second statement is correct. Right option for the question will be option B. Only the second statement is true. Next article. The government of India has announced a central sector scheme that is basically for production of the rare earth permanent magnets. In fact, the full name of the scheme, as mentioned in the government documents, is Sintered Rare Earth Permanent Magnet Scheme, REPM scheme. Now, what is the basic idea? The government of India has been promoting production of multiple products, multiple goods in the domestic market. For example, electric vehicles. Now, whenever you talk about these kind of products, certain imports are required. Certain imports are necessary. One such import that has become a bone of contention between India as well as the China, or a concern for the government of India, has been the permanent magnets, the rare earth permanent magnets. Chinese authorities, over a period of time, because listen to me carefully, 90% of the global production of the rare earth magnets is concentrated in China. Although many other countries such as Japan are also involved in the production of it, majority of the production processing is concentrated in China. And over a period of time, the Chinese authorities have imposed either direct control or indirect controls on the export of such precious commodities to the international market and try to use this as a leverage, as a bargaining chip in negotiating with other countries, including India. So the government of India is worried import dependence of this particular product is very, very high. Second, the demand for this particular product, that is the rare earth permanent magnets in India, is only going to increase. According to one estimate, whatever is the demand today, by 2030, the demand for the REPM will almost double. So import dependence is higher, the demand for this is going to only increase, not decrease in the coming days. That is the reason, in order to address this particular problem, the government of India now has announced this particular initiative wherein the government has allocated 7,280 crore rupees. 7,280 crore rupees. Now, there will be two important components of this particular scheme. One will be the government providing 750 crore rupees in order to promote integrated REPM facility. Integrated REPM facility. Now, what is this basic idea of an integrated REPM facility? The final good that is sold in the market is the rare earth permanent magnet. The final good is rare earth permanent magnets. But we get the REPM by using the alloys. We get alloys by using the metals, and we get the metals by using rare earth oxides. REO, rare earth oxides. So, in a nutshell, this is basically the supply chain activities that are involved, wherein the final good or the final output is the rare earth permanent magnet. So, the government of India will be providing 750 crore rupees to companies, to five companies which will be selected through bidding process. 750 crore rupees will be provided for setting up the integrated REPM facility, which in a nutshell means the company has to set up all of these activities or the units to take care of all of these particular activities. That is the first important component. The second very important component is the government will be allocating 6,550 crore rupees as a sales incentive, sales linked incentive. What is the basic idea of a sales linked incentive? Just like you have come across the production linked incentive, where the amount of incentive is provided associated with the sales that is conducted by the company. The government of India will be allocating 6,450 crore rupees to provide incentives associated with the sales that is conducted by these particular five companies. Now, in addition to this, the government of India by 2030 wants to install 6,000 metric tons per annum production capacity of REPMs. Simple. 6,000 metric tons per annum. And this particular 6,000 tons metric ton per annum will be contributed by these particular five companies, which will be allocated with the production capacity of 1200 metric ton per annum. These are certain very important pointers associated with the latest initiative of Government of India to promote rare earth permanent magnet production in the domestic market. Now, is it going to be very successful, or are there any concerns associated with this kind of a scheme? Because one is understanding what are the points under the scheme, and the second one, what are the issues or concerns associated with the scheme. Let me explain. Like I said earlier, China is the largest producer of REPMs in the global market. Now, annually, the total production in China right now stands at around 2.4 lakh metric tons per annum, MTPA. 2.4 lakh. And how much is the proposed MTPA installed capacity by 2030 by the government of India? 6,000 MTPA. So have a look at this. The Chinese investment, which has already been done historically, the capacity that they're controlling is much, much, much larger compared to what is the target which has been set up by the government. Although, I hope you understand this, although the amount of the target that has been set up by government of India, I hope you understand the point here. We have started now. We have started. But no doubt the fact of the matter is China, even after that, will be controlling majority of the global production of REPM capacity. But there is a bigger concern associated with this initiative. What is a bigger concern? In order to manufacture REPMs, you require the rare earth oxides. The starting point, if you remember, in the previous discussion that I did, I told you in the supply chain, the starting point is what? Rare earth oxides. The rare earth oxides essentially can be classified into two types. One is light rare earth oxides, and the second one is heavy rare earth oxides. In India's market, there is one entity, IREL. IREL, which is owned by or which is under the ownership of the Department of Atomic Energy. And this is involved in the production of light rare earth, or right, let's say oxides, RUOs, light rare earth oxides. But the production of heavy rare earth oxides as of now in the domestic market is not done, which essentially means in order to produce the REPMs, you require heavy rare earth oxides. So the import dependence is going to continue even after promoting this kind of an initiative. So these are some of the concerns associated with the initiative that has been announced by the government of India here. Now, based on this discussion, let's solve an MCQ. Consider the following statements. China is the only country to produce rare earth permanent magnets in the world. Underline the term in the world. Absolutely no. There are multiple countries, but having said so, 90% of the production capacity is with China. India does not produce any kind of rare earth elements. No. In fact, I told you earlier, IREL, which is under the Department of Atomic Energy, it is involved in the production of rare earth, right? Let's say oxides, but mostly focused on light rare earth oxides. India does not produce any kind of rare earth elements. This is incorrect. India Rare Earth Element IREL functions under the Ministry of Mines. No, it functions under the Department of Atomic Energy. All the three statements are incorrect. Right option for the question will be option D, none of the above. Let's go to the next article now. Informal sector gross value addition estimates to get a leg up in the new GDP series. In the last week's discussion, I told you this. The government of India has announced that. And when I say government of India, specifically Ministry of Statistics and Program Implementation. MOSPI has announced that the base year for the GDP, which is currently 2011 and 12, will be changed to 2022 and 23. This is one very important change. Please remember this. Now, the second very important change has been that historically, in case of India, whenever you talk about the concept of gross domestic product, you need to collect the data to calculate the gross domestic product. But in case of India, one lacune, one concern has been that we are not able to collect the data from the informal or incorporated enterprises. Right? Informal essentially means those entities which are not registered. So unincorporated enterprises or the units, we are not able to collect the data. So how did we manage to get the GDP in that particular case? Earlier, the government or the MOSPI used to use the concept of a proxy method. Right? What is the basic idea of a proxy method? In the base year, we would find out how much is the contribution from the formal enterprises, that is those which are registered, which are producing and giving the data to the government of India. So we used to find out of the total economy how much is the contribution from formal as well as informal enterprises. And according to the 11 and 12, that is the current base year, 45%, I repeat, 45% of the total GDP contribution would come from informal enterprises. But for the sake of calculation, let's take it now. 45% would come from the informal and remaining 55% would come from the formal. Now the argument is, if the GDP, again I'm saying for the sake of easier calculation, if the GDP number is 200 crore rupees for the base year 2011 and 12, essentially out of this 110 CR would come from the formal and the remaining 90 CR would come from informal. But the idea of conducting survey for finding out the production or the economic activity of unincorporated enterprises was not done every year. So how did we get the data from these entities in order to calculate the overall GDP? Because the overall GDP should consist the contribution coming from the formal as well as informal. So what the MOSPI used to do is, whatever is the ratio in the base year, the same ratio would be used to calculate even for the subsequent years. Meaning what? Let's say next year, that is after the base year is over, next year, from the formal part of the economy, if the contribution to GDP increased by 10%, then by default, we would apply this, take this as a proxy and apply the same number to the informal part of the economy as well. That is, even the informal economy would increase by 10%. So this is exactly the idea of a proxy method that has been used by the government or the MOSPI in order to calculate the GDP contribution coming from the informal using formal as a proxy. But the government of India from the year 21 and 22, please remember, from the year 2021 and 2022 has introduced a new survey, ASUSE, Annual Survey of Unincorporated. I repeat, Annual Survey of Unincorporated Sector Enterprises. In simple terms, around 5 lakh enterprises have been identified under this, and annually the data or the survey is conducted to collect the production as well as the productivity data from these unincorporated enterprises, which essentially means going forward, once the base year for the GDP is changed, the new methodology is introduced, Government of India will be using this kind of a survey data set to represent what is the GDP contribution coming from informal sector enterprises. But the data will be first, basically compared with the outcome of the PLFS, and after synchronization is done, the data shall be used to calculate gross domestic product. This is a significant announcement. Please make a note of this. Now, associated with this, let's solve MCQ. Consider the following statements regarding annual survey of unincorporated sector enterprises. It was conducted for the first time in 21 and 22. Yes, this is correct. It is conducted by the NSO. Yes, which is part of Ministry of Statistics and Program Implementation. Under this, the units only from the urban area or urban India are covered. This is incorrect because under this, like I said, the units from the rural India as well as urban India, both of them are covered, not just only from urban India. Third statement is incorrect. So first two statements are correct. Right option for the question will be option B. Only two are correct. Let me go forward now. Next article, Kerala Chief Minister or Kerala State Government's Chief Minister has been issued with a notice by Enforcement Directorate. And this is associated with the Masala Bond probe. Now, what are the important points? What are the things that you must know? Let's understand. Point number one, there is a concept of Masala Bond. What is this idea of a Masala Bond? Generally, whenever you talk about bonds in the external market, bonds which are issued in the overseas market, overseas means outside India, these are denominated in dollars, which essentially means I will issue the bond, collect the money in dollar, and the interest payment or the coupon payment, that is technically correct in the context of bonds, coupon payment as well as the money after the maturity period of the bond is over will be paid in the form of dollars. So denomination in dollar, repayment in dollar. But there is a concern here. What is the concern? If rupee depreciates like it has happened now, according to the latest data, the rupee value against the dollar has fallen to the historic low of more than 90. And if you want to understand this particular issue in detail, there's a separate video that I've already uploaded on the YouTube channel. Please do watch it. So if the rupee depreciates, falls to very low against the dollar, then if you have to repay the same amount of dollar, you will have to shell out more and more rupees. In a nutshell, if you have borrowed $1 when the exchange rate was $1 is equal to 80 rupees, now the bond has matured, you'll have to repay this particular $1. Now, if the exchange rate is $1 is equal to 90 rupees, for the same dollar, you will have to pay 90 rupees and the dollar you will use it to repay the existing loan. So there is always a concern whenever you borrow from the external market in the, right, let's say the external denominated currency. So one of the solution to this particular problem, that is under the external commercial borrowings, is the idea of Masala Bonds. Masala bonds are specific types of debt instruments. These are nothing but bonds or the debt instruments. But here, the borrowings are denominated in the local currency, that is in the form of rupees. You borrow in the form of rupees. The denomination of the bond is given in the form of rupees. The coupon, the maturity payment, everything is done again in the form of rupees itself, that is domestic currency. This will essentially protect you from the exchange rate risk, which is generally associated with the foreign currency denominated bonds. So this is basically the idea of a Masala bond. Now, come to the connection to the state government. The state government has set up an agency. A body has been set up by the government of the state, that is the Kerala, KIIFB. KIIFB. And it stands for Kerala Infrastructure Investment Fund Board. Investment Fund Board. Okay, now this is important point. KIFB has been set up by the state government, and this is very common practice. This entity has been asked to borrow from the external market by issuing Masala bonds. This entity has issued Masala bonds in the external market and borrowed, right, and has borrowed 2,150 crore rupees, which by 2024 has already been repaid according to the statement given by the state government of Kerala. So the borrowings were done many years ago, And there were certain concerns raised whether the KIFB has the authority to issue masala bonds outside India. Although a lot of discussion has happened, it's a very old concept. The argument right now is very simple. Now, the Enforcement Directorate has issued a notice to the Chief Minister of the state government of Kerala. And what is the contention of Enforcement Directorate? These particular bonds, masala bonds, which were issued outside India, the money was collected. Some of this money has been utilized for purchasing the property, for purchasing certain types of property, which is not allowed according to the provisions of Foreign Exchange Management Act. Under the Foreign Exchange Management Act, which has replaced the earlier FERA, for what purposes you are not allowed to use the money, it is specifically mentioned. Right? It is specifically mentioned. So the Enforcement Directorate has a contention stating that the funds were raised through the masala bond issuance, but some of these particular funds have been misused, and this is the violation of the FEMA guidelines or the FEMA provisions. And citing this, Enforcement Directorate has issued the notice to the Kerala Chief Minister now. Let's wait and see what will be the outcome of this kind of an investigation conducted by the Enforcement Directorate. But this, in a nutshell, is the basic idea of the topic that is taking place in the state of Kerala. Next article, PM Internship Scheme. PM Internship Scheme. Now, the government of India, that is specifically the finance minister, back in the year budget 2024, had announced the PM Internship Scheme. What was the logic, given by the government? The government stated that there is lack of availability of skilled labor in India. According to economic survey, somewhere around 11 to 12% of the labor is actually skilled. So one issue is availability of skilled labor. And to make the matter worse, there is also problem with whatever labor that is skilled in India. That is, there is an issue of skill mismatch. Right? I'm using the term skill mismatch. They will also use the term skill gap. What is the basic idea? I'm having a skill set. I know how to use a typewriter. That's a skill set, by the way. But none of the companies in the market are looking to hire a person who knows how to use a typewriter. None of the companies are hiring. The companies want to hire somebody who knows how to write a code. So argument is the skill sets that I have are not the skill sets that are demanded in the market by the companies. So there's a skills mismatch or the skill gap. In order to address this particular problem, the government of India announced PM Internship Scheme. Under the PM Internship Scheme, which pilot was launched back in the October 2024, the government of India would be asking or would be mandating these particular companies, 500 top companies, to offer internship offers to candidates. Now, these particular candidates who will be accepting these particular internship offers, wherein 12 months internship will be provided to these candidates by the companies. 12 months of internship. The objective of the government of India is that whenever there's a discussion of the skill set, we don't have sufficient labor which is skilled. And some of the labor which is skilled is not having the right skill set. So why not ensure that the companies will provide training to the candidates? And when the companies will provide the training to the candidates, obviously they will provide the training of the skill sets that are needed by the company. So once you are trained like this, the probability of you being hired full-time, given a full-time job by the company, will always be higher. So with that particular objective, the government of India announced and implemented PM Internship Scheme. The target for the current financial year under the PM Internship Scheme is 1.25 lakh offers. 1.25 lakh offers. Now, what is the update? Let's understand what is the update. According to the data that has been presented or given by the minister on the floor of the parliament, total number of offers that were issued under this particular initiative is 1.65 lakh. 1.65 lakh. but only 20% of these particular offers for internship have been accepted, which again, I'm just rounding off the number, comes out to be around 33,000, let's say, internship offers. 33,000 offers have been accepted. And within 33,000 offers which were accepted, a fifth of them, that is more than 20% of them, have already dropped out. They are not anymore, or they are not taking up the internship anymore, which again roughly translates to more than 6,600 people. So have a look at this. Initial target was how much? 1.25 lakh internship offers. How much were issued? 1.6 lakh offers were issued. How many were accepted? 33,000 were accepted. And out of that, more than 6,600 have already dropped out. They are not taking the training anymore. So now the question arises, what is the issue? Like I said earlier, there are two aspects to any of these particular schemes. One is announcement of the scheme and the provisions of the scheme. On paper, the provisions of this particular scheme are very good. These are addressing the problems of Indian economy. But at the same point of time, look at the implementation hurdles. Why the, right, let's say, individuals are not interested? Why a lot of them are not accepting? These are the reasons. The first one, the people who wanted to get the internship have applied for the internship, and the internship offers have been given to them. But now the candidate realizes that the factory where they have to go and learn the skill set, it is very far away. The distance that they have to travel, it is very long. And as a result of this, the candidate will not be any more interested. Why will a candidate travel, let's say, 15 kilometers, 20 kilometers, 30 kilometers every day, up and down, in order to learn certain skill set? So candidates are basically saying, no, the distance is very long, right? So I'm not interested. They have given the offer, but I will not go. Second one is, the candidates have been given the offer. They have gone to the company, and once they were started to get trained, once they started to be trained like this, they have realized the skills wherein the company is offering the training is not interesting for the candidate. They are not interested in this kind of a skill set. They are interested in learning some other training. So the lack of interest in the offering that is done by the companies is also one of the reason. The third and a very important reason, under the PM internship scheme, for 12 months, like I said earlier, the internship will be provided. Training will be provided by the company. And for every month you'll be trained, the government has announced a stipend of 5,000 rupees. A stipend of 5,000 rupees will be given. In addition to this, there is also a component of one-time grant of 6,000 rupees under the initiative. But the candidates are basically saying the amount of incentive that is provided here, that is 5,000 rupees stipend per month, it is not sufficient. Stipend is not at all sufficient. Because have a look at this. If you're given a stipend of 5,000 and every month you need to travel, you need to consume food, you need to pay for, right, let's say, traveling expenses, etc. Right, these candidates are saying the amount that is provided as a stipend is not sufficient enough. So these are some of the reasons why most of the offers which were issued by the companies for internship were not accepted. And even some of the offers which were accepted, some of them, a fifth of them, the candidates have dropped out. In fact, the government of India, so far this allocation of internship has been done in 2 rounds. The government of India has ensured at least in the second round, some of the concerns which were raised in the first round have been addressed. For example, geographical location is mentioned in the portal now. What kind of skill set is provided is mentioned in the portal when you apply for these kind of apprentices or internship jobs. So these are certain important points associated with the PM internship scheme. Now, associated with this, right, questions can be asked in the mains examination, because employment is one very important area in the mains examination. So please mention the fact that one problem is announcement of the scheme, that is the provisions, these are feasible or not. But even though the provisions are feasible, there might be a problem with the implementation of the scheme because of these kind of issues. right? Ensure that all of this is mentioned. Let's go forward. The government of India to open nuclear sector to private players. What is the issue? The government of India has set up a target of having 100 gigawatts of nuclear energy production by 2047. It has a target of 100 gigawatts, mind you. Right now, how much is the capacity? It's around 8.8 gigawatts, right? 8.8 gigawatts in 2025 to 100 gigawatts by 2047. But the concern is that if the government of India is only the authority which is allowed to set up these kind of, let's say, nuclear power plants or be involved in the R&D associated with the nuclear energy, etc., there might be a huge amount of a difference between what we will end up achieving and what is the target by 2047. So government of India now is considering opening up the nuclear sector for private sector participation. And mind you, this is not the first time that a very important area or the industry or the sector has been opened up for the private sector participation. For example, until very recently, that is until last year, the space sector was very much tightly controlled. Most of the participation was done through the government owned entities. But the government of India now has allowed up to 100% FDI even in the space sector. The same is being considered in the context of the insurance also. We want to open up the sector more. We want to liberalize the sector more. Defense manufacturing, etc. So in the context of this, the government of India wants to open up the nuclear energy for the private sector participation so that we will be able to achieve the target that we have set out to achieve. But there are two basic issues here. The government of India, in order to ensure that the private sector participation will take place, now plans to make changes to two laws. One is CLND 2010, the Civil Liability for Nuclear Damages Act of 2010, right? Where the companies are essentially where the companies are essentially worried that what if there is, right, let's say a nuclear accident, the amount of liability that might fall on them would be much, much higher. So the government of India wants to change, right? Wants to change and cap the liability on the equipment vendors in the case of an accident. Because according to the law, even the equipment suppliers, if they are found to be at fault, will be imposed with liabilities. And the second one is Atomic Energy Act of 1962. Under this, have a look at this. Right now, the private sector entry is not allowed. In the nuclear energy segment or atomic energy segment, private sector entry is not allowed. So government of India wants to basically amend this particular law as well, change the provision which will make it easier for the private sector participation. So these are certain important points associated with the nuclear energy. Now the last article for today, the Reserve Bank of India has announced list of domestic systemically important banks for this year, or the latest list has been announced by RBI. The same three entities, that is SBI, HDFC as well as ICICI Bank, have been covered under the list of domestic systemically important banks. Now this idea of a DSIB initially was announced by Reserve Bank of India back in the year 2014, and in the year 2015 the first list of DSIB was announced by RBI. Over a period of time, the list has undergone changes, and right now, according to the latest list, these are the three banks which are covered. But what is the basic idea? There are certain financial institutions, I'm talking about the banks here, which are very large in size. And Reserve Bank of India doesn't want any kind of a problem to be faced by these banks which will lead to their downfall. Meaning what? If a very large bank collapses, it is not just going to be having a limited impact. The impact of the collapse of a very large bank will be spreading throughout the sector. Even though other banks which have no connection to this particular collapse, the other banks will also face the brunt of the customers withdrawing the funds continuously because they are worried about the collapse of another bank might lead to the collapse of their bank as well. So there is always a concern associated with large banks. And that's the reason these banks are also referred to as too big to fail banks. TBTF. Too big to fail banks. So RBI identifies these particular banks, and again, there's a categorization under this. These are identified based on their size, based on interconnectedness, interconnectedness, based on substitutability, and based on their complexity. So these are the parameters which are used by Reserve Bank of India to identify DSIBs. And once you're identified, what will be the impact if you're identified as a DSIB? Once you're identified as a DSIB, there will be more restriction or more regulation that RBI will be imposing on you. For example, if you want to protect the banks from collapse, one way to ensure is to ensure that they will have more capital to absorb losses. So the banks which are identified under the DSIB list, RBI simply says they will have to maintain more capital under the Basel guidelines. Right, so these are some of the important points associated with the concept of DSIB. These are the three banks. Remember, the names can be asked in the preliminary examination. So these are the important articles as well as the concepts and the questions associated with the articles from 27th November to 3rd December 2025. If you have liked the discussion and if you have benefited from the discussion that I have done so far, do not forget to hit the like button. If you are yet to join our YouTube channel, kindly do it right now. See you next week again with set of articles important from different newspapers associated with Indian economy. Till then, take care.